Hi, welcome to another episode of Going Elliptic in our Charted series, where we try to help you make sense of the markets across the crypto world. But it is educational, kind of content only, no trading or tips or financial advice of any kind. But we do hope it is educational and useful for you all. Hey, Shanky.
Hey, Paul, how are you doing?
Yeah, pretty good. Obviously, more movement in the market. So, it's not this kind of dreary, same thing or same pattern as the day before or the week before. This week's looking a bit different, and that's been good to see.
100%. Yeah, the market's moving for sure. It's been moving the last few days, and perhaps we might see some new trends emerge as the market continues to move.
Yeah, and we haven't recorded a charted for a while, but you've still been pretty busy, haven't you?
That's right. We put out a few of these trading view recordings. Since we were all a little caught up with a few other pieces, we did not have a live charted session like this. But I think the same educational content was available through those small sort of trading videos, if you may, on TradingView that we've been tweeting via Twitter. So hopefully those who follow us have been getting some of that content. We will of course try and bring our charting sessions back and also guests back as we've got a few guests lined up and markets are moving, and I think it's a good time to kind of pace up a little bit there as well.
Excellent. Well, yeah, let's jump into some charts, and obviously makes sense to start with the majors. And after that, we might go into a little bit more technical details around EIP 1559. How does that sound?
Yeah, sounds perfect. In fact, that's what we should do today. Let's just look at majors, BTC, the comparison of the two, and then let's dive in a little deeper into EIP 1559 because that has been one of the biggest things that's happened to ETH in a while, in a long time, in fact, and will have possibly a lot of different long-term impacts. So I think it'll be good to kind of pass through that and see what it means.
Excellent. All right, Bitcoin.
That's right. So I think we have been talking about this area of resistance for a while now. After the markets corrected very sharply back in May, we saw that this price range around the 40,000 mark, in fact, 40,000 to about 43,000, had become a big area of resistance, right? And what we mean by that is that Bitcoin is really struggling to break through that price range. And something that we were studying and something that is very natural in most markets is that if multiple attempts are made, typically 3 to 4 different attempts are made. And if somehow the price action is not able to break through a price range like that or an area of resistance, then oftentimes it means that a lot of the steam is lost and perhaps the market will go back down and might see a complete new trend, right? So that's the usual sort of good old technical analysis, if you may, right? And we saw that play out with BTC, right? We saw BTC try to come back and touch these levels, back here immediately after the big fall, somewhere around the 25th, 26th, 27th of May. There were some of these wicks that were almost there, right near the box, but couldn't hold there for too long. The price retreated. There was another attempt, not all the way to that level, but close enough. Price came back, pulled back again. And what the story was really saying is that the buyers would try to bring it up, but there was enough selling pressure. And so the price was coming back down, but of course there was support back at these lower levels around 34,000, and then of course the rock bottom support around 29,000, 29,222 as we had plotted. So of course, once it would hit that price point, the price would bounce back up, and the buyers would step in again and try and take it back up to this area of resistance. So there was a little bit of up and down swing movements that was happening for quite a while, which we saw play out in an interesting way in June, where it became a little more bearish than what we had seen in May. Prices corrected sharply and retested the 29,222, came back up, and for the most part, they had taken the lower end of that range. And it was looking like the market wasn't healthy and might tank further, but then came, end July, where the price bounced back up, and there was some sharp bunch of, I think there were 12 green candles or something, if my facts right. And that's when it really broke through that area of resistance. It seemed like, yeah, now it was for real. It was coming back up in the area of resistance and might break through it. But when we reached there, end July, it couldn't hold for that long. One day in it, and then next day onwards, the sellers again stepped in and brought the price back down. But if you look at these areas of support, now the support itself had come back up a little bit. So we didn't see the price bounce off 29,222 or 34,241, but it actually respected the line that we had drawn long time back. In fact, these lines were drawn almost 2 months back at 37,826. And very interestingly, the BTC market is respecting all these levels, the previous levels of support and resistance. And this became area of support. And now we see it actually crossing through. So let's see what happens, but it's a very exciting
that's
movement.
exciting. Nice.
Yeah,
And
sure.
also, I know, that's a lot of green candles there from the end of July coming into August. It's unusual to see so many daily green candles closing higher every day. What did you make of that? Was that normal for the market?
Not really. I think it is unusual, as you said. Typically after a few days of green candles, sellers usually step in because those price points are too attractive to just let go. And then also buyers lose steam because buyers have only finite amount of capital. So once they're bought enough, there aren't enough buyers left at that higher price points. That is usually the case. And sometimes buyers also want to take a little bit of profit. Because think of it that way, right? If somebody had entered long at, let's say, 29,222, and the price is already up at about 37, they are essentially in the money, right? And then in the money of almost like 8,000-9,000 per unit. So sometimes people get tempted, a lot of buyers, and they feel like, okay, time for me to encash some, right? Like pocket some of this profit that I'm sitting on, right? The profit which is unrealized because they don't know where the market might go next. Things are very volatile in the world of BTC. So that is usually the historical trend. But having said that, we've also seen in the case of crypto at large, and certainly with BTC, that when things go parabolic, there can be a ton of green candles, right? They're not usually as sharp as this, but yeah, you could have 6 days of green candles with a minor correction. That happens with one red, and then again going back to a lot of green again. So I think that that is not unusual. That is something that we have seen happen in the past. And so this is just an extreme case of that, really, isn't it?
Yeah, I mean, to me, it definitely looks more normal seeing some red interspersed in with the green candles. So, yeah, since we're in August, that looks a bit more normal to me. But yeah, it was a weird time there at the end of July. So hopefully now, and there's that support level again. So, you've still kind of got the box drawn there. Can we, expect the market to keep testing those different levels?
Possibly. I mean, see, now we don't know, right? So we are not in the business of predicting price, so we don't know. But we are in the business of trying to study the markets, right? We are essentially, in some sense, looking at what technical analysis say. And so I think purely from that standpoint, if you look at the current price movement, there are 2-3 things to keep in mind and observe. One is, how long do we stay above this previous area of resistance, right? So this area of resistance we saw between 40 and 43. We are still not out of the woods, right? We saw that also around 60,000 when the price did break through and looked like it was going, but it couldn't hold very long above that 60,000 mark, right? Let's if you look at 60,000 here, and maybe draw it out for visual sake, right? So people can see it. This was 60,000, so this is just 60,000 mark, right? Roughly. So it looked like when it came here back in April that we had surpassed the 60,000. We were going to go flying through to the moon, right? Like that's what it was looking like. But what did happen was that we could not hold above 60 for too long. It was really a very short run for about 4 or 5 days at best. And then we started seeing reds, and then after that, in fact, there was a lot more profit taking, and we never broke through that 60 again, right? So at least that's what happened once. And if you look at how we reached 60, that also had the story where there was attempt to kind of come to 60 a few times, attempt to break through once there was a break, and we couldn't do it. Then, it was sort of close enough to 60, then really broke through and looked like, yes, we're flying strong. Then pulled back. There was one last attempt and it crashed back down. So, assuming that there is a similar sort of a price movement, it's possible that such things could happen around this mark, around this level of 43,548. I mean, it's a possibility. Not saying it will happen, but it's a possibility because this has acted as a very sharp area of resistance in the past. So, unless the next 5-7 days it definitely stays above this and it's totally clear, it's quite possible that it'll retest this level, right? So that's quite possible, and it might come back down. So that's one possibility. The other one is that we are seeing a little bit of red today, but the price may continue to grow a little further and cross the next level, if you will, the next area that is mapped out there, which is 47,532, which is also an area of value, right, which has been tested in the past. And if it breaks through that, then I think this 43,548 could flip and become an area of support instead of an area of resistance. That's a very common thing that happens with charts or with markets at large, where a previous area of resistance ends up becoming a new area of support because now the price is higher. Or the other way around, if prices are going down, they're turning bearish, then one also observes that the previous area of support ends up becoming a new area of resistance, right? So these levels kind of tend to get reused because they have become price points which traders have become aware of, right? So I think that's the key thing to watch. What does the next 5 candles look like, right? The 5 daily candles look like. Are we staying above that 43, price level? Are we going beyond and retesting the next sort of, sort of significant price level and going beyond that? Are we going to pull back a little bit? And then what happens to that price level? The area of resistance, does it now turn into an area of support? So I think that's really what we need to keep our eyes on.
Great. Well, yeah, let's jump over to Ethereum and see what parallels. Obviously, very high correlation between Bitcoin and Ethereum at the moment, but even more green candles there, fewer red.
Very much so.
Again, just looks abnormal, but not unlike what we saw towards the end of April and start of May.
Yes, certainly, yeah. So I have a slightly different take on this current market. I feel like purely from a narrative and emotional standpoint, although BTC is usually the one where most crypto traders definitely have large holdings, so it's certainly the leader of the pack. And it has been observed that BTC leads, and then usually ETH sort of follows closely these days, and then the alts come in, right? And also when the market starts correcting, that's usually the same pattern, right? Like BTC starts falling, and then of course the others sharply follow BTC. However, if you really look at this, I don't know, current or last, either way that you look at it, bull run, that we've been seeing beginning of this year, there have been points where ETH and BTC have deviated from each other. There have been points where BTC looks bearish, but ETH still looks strong, and the other way around, right? So that has happened. There have been some areas of divergence. My take is that the current market action, the current positive action in the market, the price action going north and rising, is really more of an ETH story, right? Like, and this is, I'm just saying from a narrative standpoint, right? Like, there is no strong BTC narrative that is new in the puzzle over the last few months, right? So there's absolutely zero new narrative. Now, the last 60,000 run was the BTC narrative because it was about institutions coming to BTC, right? Tesla buying BTC, MicroStrategy folks buying up BTC. So it was the BTC narrative that was taking the market with it. This particular run, I think, if we just kind of pass through it, is really the narrative that ETH is a strong asset, and we'll discuss that a little bit, with that 1559. But there was a lot of sort of narrative around ETH. ETH as the technology, ETH as a deflationary asset, ETH as the valuable, sort of medium of exchange and the kind of powerhouse behind DeFi. So all of those narratives have really pulled it together. And ETH in that sense has been a bit of a leader of the pack, right? So that's certainly something to keep in mind.
Yeah, and I think we see that quite clearly on the ETH BTC chart. There was a point there through July where Bitcoin started to, kind of pare back some of those losses versus ETH. But yeah, now we're seeing kind of ETH back almost to where it was in June, and maintaining a lot of those gains, as you're saying, since the start of the year. That's a pretty big shift up in terms of the relative value between Ethereum and Bitcoin.
Yeah, 100%. So that is another interesting one to look at. I think you pointed out to a great metric, which is basically ETH BTC. And if you look at ETH BTC, there are actually 2 points which are becoming interesting price points. One that is drawn here that we had drawn a few days back, right? And this is the point around 0.068, that is ETH to BTC. The 0.068 has acted as an area of support and resistance in the past, and it looked like if we break through this 0.068, it's possible that ETH might rise sharper. In fact, you might end up seeing peaks like this possibly, right? Like the 0.08 and beyond are possible if that happens. And of course, we don't know. We're still very close to that 0.068. So we'll see how this unfolds, right? This needs to play out. But we're certainly there. We are at that price level. You're 100% right that, when we climbed up earlier, it was looking like an endless rise towards, newer highs every day. But when the market started correcting, ETH actually started falling more sharply as compared to BTC. And there was a time when it had come down below the 0.06 mark. And people were getting, and when I say people, I mean traders and crypto traders, and traders were discussed quite openly and vocally on crypto Twitter and other venues, were getting a little nervous because the sentiment was like, oh, now it's less than 0.06. What's happening, right? Like, are we ever going to see ETH rise back again? Because early on there was a whole narrative of ETH potentially even flipping BTC, right? So I think some of those fears had come in, but now we are back into healthy territory, is what I can see just by looking at the numbers. What that means behind the scene, why traders are doing it, is another story. That's something we don't want to speculate.
Yeah, and the long term, you've kind of got charted there the EMA indicators for 20, 50, and 200, but yeah, they're looking like a positive kind of trend there that is still largely maintained now that we're back above both the 20 EMA and the 50 EMA. So yeah, that's a different look to the chart than when we look at just Bitcoin and Ethereum on their own, where they're only just kind of regaining above their EMA 200.
Totally, yeah. I think you're absolutely right there. Something to also keep in mind is the rest of the market is also all booming at this point in time, and we won't get into all those details. We'll look at it perhaps in the next charted session. We'll see where things are, maybe a week out. But at this point in time, they all seem to be in that same upward direction or trend. Generally, the market seems to be up.
Yeah, no, that's a very good point. It is crypto. Tide rises all boats, and yeah, definitely. It's relative values within the crypto economy, if you like, that are perhaps some of the most interesting or less talked about things, because everyone's so busy talking about the dollar price. But yeah, I like digging into some of those fundamentals. And EOP 1559 is one that we've talked about a few times on the show. Every time we're kind of like looking at Ethereum and kind of going, hey, we know that's coming in start of August, but is it already priced in? And it's still really hard to say that. Was it priced in prior to the 5th of August? I certainly think so. What's your take on that?
Yeah, it's a difficult one. I think you said it. I also, I mean, we've discussed this. We're both on the same page. I did feel like 1559 was priced in because it was very obvious. But what we have also seen, and the only other parallel I can draw to is the whole BTC halfening type of story, or halving, right? Like the different words used for it. When the supply sort of, the mining rewards become half. Typically, there's a delay also. Like, there is a little bit of pricing and that happens, and then there's a little delay, and then we see the markets kind of recognize it even more. So my sense is that what has really happened is people who are watching very closely and very hooked into the ETH ecosystem, I think was probably priced in for that a lot. They were already bullish, they were already buying, and definitely I think they must have pushed the price up, right? Like there's some effect of that for sure. But the broader masses may not have understood that yet, right? Because this whole
Yeah.
deflationary process and how much is the deflationary process and what is the real impact hasn't been discussed as widely yet, right? And so, and I'm not even talking about non-crypto. I'm saying even with the cryptoverse, right? Like not everybody is very aware of it. So I think as more people get aware of it, I would suspect that there might be some more impact. But we'll see. Let it play out. In fact, I'm sorry. Go ahead. Yeah.
Well, I think that touches on one of the really interesting points, because with a Bitcoin halvening, reducing the block reward, it is affecting the miners, right? So it's not as transparent. Yes, you still see the block reward, mathematically has been reduced. But people wait to see what are the inflows and outflows from miners onto exchanges. Are they holding? Are they cashing out? And it takes a lot more analysis to see the actual effects of that. However, with EIP 1559 and the base fee being burnt, like that was something from that block onwards you can actually measure, right? And it's not something you need to analyze exchange flows or other deeper analysis to actually get a figure on. So already, and I'll bring up a chart here from Token Terminal, we can see there August 5th, the day that EIP 1559 took effect as part of the London upgrade to Ethereum, you've got now a kind of exact number of ETH that was burnt. So in that first day, it's looked at, I'll also explain here, in green is the supply side revenue. So that is the miner block rewards. Those still carry on from now until the merge, which is more likely to come end of the year or start of 2022. And then you've got the protocol revenue. And yeah, it's quite interesting. So, miners are making less because they used to be able to capture the block reward and all of the transaction fees. Now that the base fee kind of takes away from that total gas price that users are paying to transact on the network, that's actually to the benefit of all ETH holders. So that's why it's now labeled as a protocol revenue. And even more interestingly, if we put it as a percentage share, we're seeing here upwards of 60 to 80% of the revenue of the Ethereum network, if you like, actually going to ETH holders and not to miners. So yeah, as these types of numbers, obviously big dollar values, but I think the percentages and the actual quantity of ETH burnt becomes more widely known. Maybe we'll see a follow-on effect as people kind of really get hold of or get their heads around what this means for Ethereum in the months and years to come.
Yeah, 100%. This is actually a great chart and a great metric that you've shared, Paul. So let me ask you a question. Something that a lot of people get confused about, and maybe you have a view on it, is like, does EIP 1559 really make gas cheaper? That's a lot of people are confused, right? A lot of people are trying to ask that question.
Yeah, so perhaps from just the technical perspective, why EIP 1559 was proposed in the first place several years ago, almost 4 years ago now, was to improve the user experience, right? So even the very first proposal didn't mention anything about reducing gas. It merely was going, let's try to make gas a little bit more predictable. So it's a better experience if a user knows that as long as they put at least this much, they will get mined into a block. Because previously, if you underpriced your transaction, it was kind of like this. After 30 minutes, what do? Do you speed it up, pay more gas? Is it ever going to get into a block? And that's not a nice feeling for a user from that user experience perspective. So this was a way to say, okay, at least the base fee goes in, and anything above that might get you mined sooner because it's still a tip, if you like, going to the miners. But that doesn't, kind of negate the fact that there's only so many transactions that can fit in a block, and miners are always going to keep prioritizing the ones that have the highest tip and the most that can go to them. So I don't think this is going to have a big effect on gas prices. We might see it be a little bit more, temporal in terms of sharp spikes, like even we saw the other day with some NFTs dropping. Okay, great. The gas prices shot up for a couple of hours and then they came back down. So I do think we'll see the range of gas prices take on a much larger range of both highs and lows. On average, maybe it ends up with a lower average gas price. And in fact, EIP 1559 wasn't the only gas change in the London upgrade. Vitalik, kind of forewarned back in April, he was fed up with the gas tokens, right? So there was this whole mechanic of creating a small, particularly useless smart contract, because when you destroy a smart contract, you get a gas refund. And so a lot of quite technical speculators were creating these gas tokens when the price was low, and then burning them when the gas price was high, and actually profiting from that as a protocol arbitrage. And so that's now those rewards when you destroy a smart contract are much, much lower. It's not economically feasible to kind of operate gas tokens on Ethereum anymore. And I think that's probably the biggest difference for keeping gas prices on average relatively sane.
Right. So that's a very good perspective, actually. Thank you for sharing. I think a lot of people are confused about this, right? And so I think once people parse through this a little bit more and understand that 1559 has a lot of impact, but also that does not necessarily make gas cheaper, right? It makes it more deflationary, it impacts the miners, it puts back more into the ETH holders, and it's a protocol level change. I mean, that is something that people may really need to wrap their heads around, right? And once they do, we might see some price action, right? Back in the market, the price will be.
Yeah, and I think also, it's still a long game, right? So Ethereum Foundation has quite a detailed roadmap around ETH2. Obviously, it's been a lot of talk and not much action, but this is one of the first kind of key upgrade points. The next one, as I mentioned, is the merge. And at that point, block rewards are switched off for ETH1. ETH1 basically does merge into the beacon chain for ETH2, and it will be stakers that get rewards. And I think that might also have an impact on the kind of gas prices. And then the following upgrade after that is when we'll start to see things like sharding and more scalability, but that might still be another year or so away. So at least there's progress being made, but there's a lot more before Ethereum actually can scale to the amount of users that are using it. I saw a tweet this morning around OpenSea is now using more gas than Uniswap, right? And Uniswap has been the largest gas guzzler on the Ethereum network for a long time. And now OpenSea and the NFTs as a whole might start to use more gas than DeFi has. So really interesting dynamics at play as more and more utility comes to the Ethereum network. It costs more, and that's something we've seen since day dot, and I think we'll keep seeing that for at least another year or two.
Yeah, another great point. So I think what you're saying, in other words, is the type of apps that you may, the broader category of apps that you may, might also impact that, right? And we saw the initial DeFi, swap venues like Uniswap. Now we're seeing NFTs, and then we might see something else. Tomorrow's gas price determination will be based on some other kind of a play altogether. So something we'll all figure out. Yeah, very cool.
Definitely.
Excellent.
Great.
So this has been, really interesting, Paul. Thank you for sharing this EIP 1559 stuff. In fact, I would probably suggest, and again, listeners, if you like this, then do let us know. That I think we can share more of these fundamental bits around the chains, certainly about Ethereum and more. You have a ton of experience all around this, and it'd be great that we can share this with our listeners.
Yeah, if you do like that and you want to see more variety of charts, not just trading view and price action, we can dig into token terminal and some of the other kind of fundamental metrics around different protocols. So yeah, let us know, tweet or comment, reply, and yeah, we can definitely bring you more diverse content, because at the end of the day, that's what Going Elliptic's about, is, as a community, helping people make sense of what's going on, both at protocol and at the market level. So it's exciting.
Fantastic. Yeah, and well said. I think it's all about educational content. Our mission at Going Elliptic is to make you just be more aware of everything, from what price action means, how to read the charts, to what's going on at the network level. And that's why we sometimes bring guests as well, right? Because we have our perspective and share, but we want to make sure that we capture as much diverse perspective of people in the crypto sphere, right? And so we'll continue to do that as well. Call on guests again from different walks of life. Some traders, some protocol developers. Some people who are looking at just fundamental community and other things. And I think there's something to learn from each one of them.
Great. Well, yeah, we'll wrap it up there, but we will be back again most likely next week with another Going Elliptic, and yeah, very much looking forward to having you all back in the audience and joining us live, so you can ask questions, and yeah, good luck with the week ahead.
Absolutely, and keep going elliptic in the meanwhile. We'll speak to you soon.
Perfect. See ya.